Good morning, everybody. Mike Vacchi, Princeton Trader here for ntmarkets.com with your Monday morning pre-market webcast. Okay, so good news on the jobs front on Friday. I mean, you had a good headline number, you had good revisions for a couple months back, and you put that kind of news into this market, a market that was kind of hanging out below the upper Bollinger Band on the daily chart as it is, and you're going to go up and you're going to get that Bollinger Band, and that's what happened on Friday. Looking at today and looking for the rest of the week, I'm not going to spend too much time on this because it's pretty simple. There's no economic reports between now and jobless claims on Thursday morning that really have any significance. So we're kind of trading in a vacuum. We have punched the upper Bollinger Band. I expect us to drift back into the 1606 area today. If that 1606 area holds, then I expect us to go back up and test the highs. And the way that's going to play out on a daily chart is you're going to see kind of a riding of the upper Bollinger Band, okay, where price will continue to reach for the band each day and come down and make that customary dip and then go back up and reach for price. So have your eyes open for a morning dip to buy. And if that dip is bought, then you've got your risk marker, and you can go ahead and take that long for a look back up into the upper band, which is your exit area. It's not a very complicated trade. So then the issue becomes, where are you wrong? Well, you are wrong if we break down below, if we break down below 1605, then we get back up into the area where that was the initial push off of the non-farm payroll number. That was an area that started down around 1591 and pushed up into 1605.75. Okay, I think we could go back as far as 1600, but you really want to see that round number hold. If the bulls lose 1600, then they start getting back into 1597, 1593. So if you're going to try this morning, just have a pretty reasonable stop underneath any morning dip, depending on what your risk tolerance is. But you need to be looking for the upper Bollinger Band ride, not looking at Friday being the top of the market. There's been a lot of candles that look like the top. I can go back. I can go right here. Third standard deviation Bollinger Band touch. Doesn't get much more toppy than that. We reversed back down to touch the lower Bollinger Band, and the bears couldn't take it any farther. So what have we done? We've come back up to touch that band. Do I think we're going to go back down eventually and touch the lower Bollinger Band? Absolutely we are. Absolutely. Is that day today? No, I don't think it is. I think we're going to ride it for a few days, and then we'll exhaust up there. The tip-off for what could be a top and a reversal would be to get some big ticks and some kind of a fear trade going. But you didn't see any of that on Friday. You saw a lot of buying. You did not see capitulation. You did not see fear. You did not see significant ticks. And in the absence of those things, that gets me leaning towards a Bollinger Band ride. So that's that's your roadmap. If we get some ticks, then my opinion of things will change. But we're looking for a dip, and we're looking for a Bollinger Band ride in the absence of economic news into Thursday. Okay, everybody have a fantastic day. Mike Vacchi, PrincetonTrader.com for ntmarkets.com. I'll be back tomorrow morning with another webcast. Trade 'em well, everybody.